Okay, lovely evening, everyone. A quick disclaimer: I'm not a financial advisor, so everything on this chat or everything embedded in this video should not be seen as a trade signal. Because I don't have a license to do such. Everything in this video is from my personal view. So the analysis we'll be having tonight should be more brief because the beginning of the analysis is our economic calendar. So the coming week, this is from tomorrow, Monday. The time is 8:29 here in Nigeria. So from tomorrow we'll start looking at the chart again. So before the new week starts, we analyze the market and see the possibility of what could happen or what we could work with the coming week. So Monday we did not have any high impact news. We only have middle and low impact news. On Tuesday we have a news. We have high impact news, but not on USD. We only have medium impact news, which is by 4 p.m. our time. On Wednesday, we have news on the euro, and that is in the morning, which happens to be London session here in Nigeria. Then we have by 3:45 the flash manufacturing PMI. On Thursday, we have on the euro as well, which happens to be London session in the afternoon, and which coincidentally becomes morning section for New York. Sorry for my voice. And we also have on USD. Then on Friday we have copy C price index. So this is what we have for the coming week. That is, we make use of the calendar to know when to engage the market. So a quick one here. This red envelope means high impact news. The orange like envelope is the mid impact news, while the yellow is a low impact news. So that is what we translated from this calendar. So let's dive straight into the chart and see what we forecast last week and what we'll have in the charts after our analysis. My bellwether is the dollar index. While waiting for it to load to come up, we go through dollar index, the euro USD, the Nasdaq, S&P 500, the gold and the Dow futures. If I'm chance, I might look into British pounds versus USD. So now watch list here. We have the dollar index, Euro USD, GBP USD, Nasdaq, S&P 500, Dow futures in the gold. So we start with the baseline, which is the dollar index. What have my interest on dollar last week? I'm bearish on dollar index. So also I said the only thing that will make me decide, or that will make me change my gears to being bullish on dollar, is when something happens. So let's see if it really happens on the dollar index the way we expected it to happen. What the hell is wrong with my network tonight? So this is our dollar index. And where we ended the market last week, Sunday, I said I prefer the market to take out these lows here. I prefer the market taking out that low, but the market decided to raid the buy side. I also pointed this out in my last video, that if the market should take out this high, I can then decide to look for bullish movement on dollar. So if this high is being taken, then the market will gravitate towards the main threshold of the bearish order block we have on the weekly time frame. The bearish order block we have here, there is a bearish order block here, that green candle. The green candle here. So the midpoint of the market of the order block has been traded to. The midpoint has been traded to already. Then we possibly should see the buy side level to be taken as well. So that does not mean I read it wrong. I never read it wrong, because I said this is what I wanted to say in the market, and if it does not come to fruition, the market should hint us by taking this high. And the market took that high and took the next target, but the market left something here, which is a void. market left a kind of gap here, a volume imbalance. The market level volume imbalance here, a liquidity void, because there was no activity at all around that area. Let me pick the coordinates and have it fixed in. The I comes in at 102674, and it happens to be the closing price 106 and 10267. Okay, the coordinates should be 102674. Hmm. 106674. You are going to 679. 674. Stay there. And then if you check between the high of this candle and the low of the next day's candle, we discover there is a gap, and that is an actual void, liquidity void. So let's go on the lower time frame for us to see, to have a clearer view of it. Let me make use of the 1 hour chart. You can see on a smaller time frame, it was an actual gap. Here. Yeah, there was no movement at all here. So it has a liquidity void, and it also have a volume imbalance, because on the H1 we only have a single pass of this candle. We have a simple pass of this third candle here, so it blew through it. So to cut the long story short, what we viewed on what we have the intention of last week should be carried over to this week is one of two things has to happen. Is either the market get back into this level here, downward level here, before it trades back up, because this is a fair value gap here. We have a fair value gap and we have a liquidity void. So it's expected for the market to revisit those areas, since it has the intention of going towards this level. So the moment the market has taken this high, I don't have the intention of being bearish any longer on dollar index. So I only expect a retracement down into this fair value gap here, and at max the revisiting of this liquidity void. So that is that on dollar index. So expecting the market to take the next buy side liquidity, then we will watching and be expecting the market to go as far as this sell side imbalance, buy side inefficiency here. This is CB, a fair value gap here. So be expecting the market to get to the level. Let's mark it up. CB, sell side imbalance, buy side inefficiency. So that should be where to expect markets to get to. That is what we'll be working with for next week. So a quick run on Euro USD. Since I said I prefer dollar index to go lower than going higher, so the opposite happens in Euro USD as well. I read it wrong. There's no harm in that. Also, I said I prefer the Euro USD going higher than going lower. So I said I expected these highs to be violated and revisit this blue line here, than taking out this swing low. So the moment this swing low has been taken out, I'm expecting the market to continue downward. I said it's either it takes that swing high or it takes this swing low. And from what we have last week, the market decided to trade lower. So let's see what the news, the impact of the news coming next week will be. So the first objective here will be the fair value gap here. The fair value gap we have in here. This is a buy side imbalance, sell side inefficiency. Then from there, we expect the market to visit this low here, this swing low here, and this. So the coming week we'll be expecting the market to visit those lows, but the minimum the market should visit here. But do we expect a retracement? Sorry, fine. A retracement is allowed and shouldn't retrace to the extent that it takes this high. I'm expecting a retracement into this CB here, sell side imbalance, buy side inefficiency. So a retracement into that level is allowed, but it shouldn't come back to this level again. If it does, that means I'll have to cross my hands and not bother going into the market again, because it's not what I want. It's not giving me what I want, and I'm not ready to risk any money on that. So since the dollar index has shown interest of going up, of going bullish, so we automatically switch gears to being bearish on Euro USD. So we expect these levels to be taking this level here, sell side liquidity, sell side liquidity pool. Bottom. So this is the level we'll be looking at, the sell side liquidity pool. So we expected the market to visit that level the coming week. Yeah. So then let's move to GBP USD. Let's quickly have a review on it. So yeah, I think the market should visit and gravitate towards this level here. This level are too clean. So we have sell side liquidity here, we have liquidity pool here. It has been taken here, but this one has been taken, but the market retraced. Also, I did not expect the market to go above this swing high here. Shouldn't go above this swing high here again. It shouldn't revisit even this. It shouldn't go above this. If the market should go above this, the best thing is to stay away and have a further rethink or observe the market further to tip its hands into what next it want to do. So on this, because I've seen this as a long time high, this is a long time high, long time swing high, this is a long time swing high, and these are intermediate swing high, these are another intermediate swing high, and what is forming here also is like an intermediate swing high. So till the market opens, but I expect the market to drop and take this level, and also take the previous day's low as well. So the market will visit this before this. The market will visit this. The market will visit this level, then before this level. Then we now gravitate towards the buy side imbalance here, sell side inefficiency. So I think that on the GBP USD. Let's move to Nasdaq. On Nasdaq, as of last week, we favored a buy side movement. And um I think on Thursday our our level was met, so we expect the market to take this high, and it happens on Thursday, and the market is still rallying higher for now. But because I expected a slowdown a bit, I expect the market to slow down a bit. I expect the market to come down to accumulate more longs, to accumulate buys. So I'm expecting the market, if I thought the market would decide to come and accumulate longs, it should stop somewhere around this order block here. The market can continue going higher, can resume going higher, but to come down, it will revisit this order block. So if the market gets to that order block, maybe on lower time frame, let me see what we'll have on lower time frame. Oh, it has run. The market was so much in a hurry, so it might not even get to the the daily order block, because this is the daily order block here. So it might not even get there. It might react at these levels. We have a buy side imbalance here, also a break a week gap here, and we have order block here as well. So on Nasdaq, we are still bullish based on what the market portrays. But for me personally, I will need more intel in order to go into it as well. So let's quickly go through the S&P 500. Does the S&P 500 does what we expected it to do? Finally, the S&P 500 are taking that level, that blue line of 4818.62 has been traded through successfully. But at this point, I expected the market to slow down and revisit downward movement. Either it will continue higher or it comes lower. At this point, the moment the S&P 500 has taken out that level we have been watching since December, I expect the market, I will be nimble on it. I will only be taking scalps on it. So for me to know if the market will resume going higher or it comes down, anyway we move. Let's go to our Dow futures. It's becoming lengthy. On Dow futures, we expect the previous week's high to be raided. The previous week's high to be raided, which has happened the way we expected it to. The previous week's high was raided. The high here, let me bring the high here. That was the high we were interested in. So it has been taken. It has been taken. has been taken. Let's see. So we expected the previous week's high to be taken, and it has been raided on Friday. It was taken on Friday because the eyes were too clean. The eyes were too clean over here. That was why I was interested in taking those level, and it has been taken. So we only read dollar index and euro USD wrong. So we were right on Nasdaq, S&P 500, and Dow futures. And dollar index and euro USD, I can't say we are wrong, but the market chose to give us the strength we needed to switch our gears. So then the last but not the least, let's go into gold. I was contemplating on gold that long term I expected gold to move higher. I expected it to move higher. But short term should be bearish because we have sell-side liquidity resting below. So this was the level I was expecting the gold to take here. It should take this, then we should revisit the buy side imbalance, sell side inefficiency here. So as you can see, the market has taken that level and it got to that level and it started retracing. But since what we saw on our baseline, I'll be bearish on gold as well. Since that level has been taken, the next level to be taken should be this. Should be this level here. So the next level we'll be watching on gold will be this level here. That is after it has taken this previous day's low. Let's mark the previous day's low as well. Let me mark the previous day's low. This is the previous day low. So we expect the market to revisit that low, then fill in into the buy side imbalance, sell side inefficiency here. Once this level is taken, it should drop into this level, then we continue here. So I think I have done justice to everything on my watch list tonight. So click on your like and subscribe to our channel for more intel on how we read the market and what we have as an opinion the coming week. Once again, thank you to every one of our subscribers. Please do also favor by liking our videos. Also, everything in this chat, every damn thing in this chat, everything I mentioned is based on my personal opinion. Is not a trade signal because I'm not a licensed financial advisor. So have a lovely week and a productive week and trade safely. Thank you all. Bye for now.